This is the Equity Management Academy Seeking Alpha report published on Monday, March 25th, 2019. E-mini S&P 500. Have we made a top? Summary. The VC PMI artificial intelligence is telling us that the market has a bearish sentiment, but the moving average is bullish, so it is a bit of a neutral signal. If the market comes down to 27.89 to 27.65, it is a very strong buy-in opportunity harmonically, with the daily, weekly, and monthly signals aligned at the B1 and B2 levels. Mean-reversion trading seeks to capitalize on extreme changes in the price of a particular security or a commodity based on the assumption that it will revert to its previous state. The VC PMI is a contrarian indicator, so it advises buying when others are selling and selling when others are buying. Let's take a look at the report. If we go on to the Seeking Alpha website, and let's just take a look what the report had to say here as we published it on March 25th. Last week's report, take profits. If we take a look at the weekly report that we published on March 16 on Seeking Alpha for the E-mini S&P 500 futures contract, our summary indicated that if you are long, you should take profits at 28.64. The weekly high that was made last week was 28.66. After activating the target at 28.64, the market completed the weekly structure that we anticipated in the March 16 report. Our subscribers in the Equity Management Academy live trading room and our Seeking Alpha marketplace service were able to get this information in time to take advantage of it to trade. We were able to capture the sell 1 level on a weekly basis at 28.64. This was the weekly report that was published on March 16. Summary. The weekly trend momentum of 27.49 is bullish. The weekly VC PMI of 28.03 is bullish. A close below 28.03 negates bullish trend neutral. If long, take profits 28.64 to 28.98. Bearish trend momentum. By the market coming down after completing the pattern and closing below 28.64, it activated a bearish trend momentum. Automatically, when the market confirms that a target is completed, the market is set up for a reversion to the mean or to test the average price, or what we call the variable changing price momentum indicator. The VC PMI is a 50-50 standard deviation level that we use to identify the daily, weekly, and monthly average price. By calculating the average price, we can extrapolate the means above and below the mean. The levels that we identify are the highest probability based on the relative implied volatility factor of occurring. The S1 level is a 1-to-1 factor and has a 90% probability of reverting back down to the mean of 28.03, which was last week's average price. These are confirmations of the short signals that were produced and advised in our live trading room. Sell short on a close below 28.63. We anticipate and prepare our subscribers ahead of time by providing them with this information prospectively. The market, after testing and confirming the short trigger, came down to make a low of 28.05, not quite coming down and testing the weekly average price that we have at 28.03, but close enough. The VC PMI was able to give you the long signal, the target, and the reversion prospectively. We identify in the live trading room the different levels of support, resistance, where the supply and demand levels are, and we teach you basically how to identify and execute the VC PMI on a daily, for day traders on a daily, using daily criteria, and for swing traders using weekly criteria. One of the things that we teach our subscribers here is the harmonic convergence that occurs. Even though the market continued to test the upper levels of supply, when the price got up to 2866, it brought the price levels to an extreme level above the weekly and monthly levels. And above the weekly, daily, and monthly mean, basically. The artificial intelligence of the VC PMI clearly identifies these levels in red. When the price is at these levels and the price equals the same spread across the daily, weekly, and monthly, a harmonic convergence occurs, even though each analysis is done independently. This is the highest probability of a reversion to occur in the short, intermediate, and long term. The market came down from the high on Friday and almost activated the weekly average of 2805. And it came down, basically, came right down to close at about 2807.50. The weekly trend momentum for this coming week, the average price is 2763, excuse me, with the market closing above 2763, the market is still a bit bullish as we come into this week. The weekly VC PMI or weekly average for this week is 2827. And we want to see basically how the market reacted from these levels here of 2827. We anticipated here in the report, we clearly stated that if the market comes down, as we come into this week, according to the VC PMI, it has the demand levels of support that could be activated, and we anticipated that if you are short, you should take profits at the buy one and buy two levels of the demand, which is 2789 to 2765. When or if the price reaches 2789, it has a 90% probability that the market will revert back from there. On the first touch, the market completes the target, and then the VC PMI program goes neutral and waits to activate the next trigger point. From these levels, we are looking at a 90% probability from the B1 level of 95% probability from the B2 level. If the price is activated and closes above those prices, the market activates a very strong signals as we come into next week. This is the week that we're doing this report. Right now, it's Tuesday, March 26, 7:42 a.m. At the same time, we have to see how the market reacts. If it rallies back up to 28.27 and closes above 28.27, it activates the upper levels of the extreme above the mean with a sell 1 target of 28.45 and sell 2 targets of 28.88 as we come into this week. If we take a look at pretty much what's happened here is the low yesterday that we came in on Monday, was 2789.50. 2789.50. Our subscribers got this report ahead of time so they can prepare to make a decision, when the market reaches and activates these levels, which it did yesterday, and it ran up to 28.27. That's where we're trading almost right now, 28.28, right in that vicinity. And it completed basically the pattern now of being long from the 28.89 and change. 28.89.50 satisfy the criteria that is needed to complete this level of support, this level of demand. And when you see the price react to this level of demand against the supply that's driven the market down, you pretty much see the energy of the market beginning to activate its bullish uptrend, and then the target automatically becomes the mean, which is the 28.27. We are basically completing this target right now as I make this video, and a close below 28.27 is going to activate now once again the lower levels of this weekly levels of demand, which is the 27.89 to 27.66. The 27.66 are levels that pretty much comply with the monthly mean, the monthly levels of support.